share my screen, lest I forget to do that. Screen 2. Okay, so yeah, one of the things I was saying is that one of my next projects for Prop Alpha study is kind of a generic first touch drawing. So we got these first touch signals on a bunch of the price action based studies. With the drawing that draws a level, the ATM gain loss draws a level. When you hit that level, fires on a subgraph, and then it clips the level, with some clipping logic. And I think I can abstract that easy enough to make something that's very flexible, and it will let you all make your own custom signals, just like the goal is for all this stuff. So I think when he hops back on, we can try to look at this dynamic delta pivots stuff and how to calibrate this on different time frames. But I see he's looking at changing his mic. So let's see. I can start getting this set up here.
Can
So
John talk?
yeah, John, you want to give it a shot? See if changing that role fixed it. All right, let's look at this. So we're going to do dynamic. Well, before I do dynamic delta pivots, let me do something here. Let's see. I'll see if so Artex, I want to go down this dynamic delta pivot calibration rabbit hole, and we can do it via chat. But I really hope we can get this permission stuff sorted out. See if we can hear you. Because if your mic works in other discords, it doesn't work in this one. I want to get it straightened out. All right, duplicate chart. So I'm going to go ahead and start with doing this on a 750 volume chart. But basically the methodology here, so from that I learned from Flary, is what we want to do is really look at rotations, and then we want to look at an average rotation. So I want to do Prop Alpha Pro, and then I want to do rotation calculator, harmonic rotations. Okay. All right, so harmonic rotations is one way of doing this. You're basically trying to figure out, okay, so harmonic rotations is a sort of a volatility study, which is looking for a pattern. Here it's, 2 up, 3 down, 2 down, 3 up. A pattern that roughly corresponds to some sort of swing high, swing low. And then it's measuring the rotations between those and taking taking the length and a duration measure. And so what we want to do, and again, rotations are one way to do this. The other thing that I probably like more, that makes a little bit more rigorous sense to me, is the what do we call it here? So we've got move metrics is another way to measure volatility. The other way we've got to measure volatility is why is my brain not working tonight? I did not get enough sleep, courtesy of having small children. We have
Like the what is it called? Like the period stats or
rotate. Yeah, we have like a rotation statistics calculator, but I'm blanking on the. Oh, it's
Can
PA
y'all hear me?
zigzag. Yeah, now I can hear you.
there we
Okay,
go.
Oh,
sweet.
it's my. I guess maybe it's my computer.
Okay, it's good to know that it
It's a
wasn't
number.
totally on
I'm
my
sorry
end.
for being. That's frustrating.
No, no worries. Okay, so PA zigzag, brain fart over. So PA zigzag is also measuring rotations in some sense, and it's very different. It's a sort of a different logic. We are using the using zigzags, and so we would have to I'd probably change this considerably to make something sensible here, but like actually I'd probably want to match something closer to what harmonic rotations are. I don't know that one is the right thing to do. Um, so so it's reversal amount, I guess, in points. So let's say if you had like uh, so what I want to see, I actually kind of want to see the zigzag. So let's look at the so my logic is based on the zigzag. So again, basically to say what we want to do here to calibrate the dynamic delta pivots is like what Flaherty's methodology was for this is you look at the average harmonic rotation, the average 1 minute harmonic rotation over 90 days, over your look back, whatever. And then you choose the volume bars so that the average breadth of the volume candle matches that rotation. So basically you're looking for how much volume how much volume do you have to do to create a rotation of the product on average. And then you use some fraction of that to use for these delta pivots, dynamic delta pivots, these sorts of things. So what we want to do is, I mean, I think there's a number of ways you can skin that cat. I do want to look at zigzags. I mean, in some sense, you would want to say that we want to look at calculation mode 2, and then I would say reversal amount here. What was I doing? Like, I was doing something like 40. Let's see what that looks like. Way too much. So what about like 2? What about like 4? So, but yeah, again, in some sense, we want to say number of bars required, 1. And again, let's say points required to make a reversal. I'll find something that looks reasonable for the product. And this again may vary as well on trading style and product and what you like to see. In some sense, what I'm looking for is a natural volatility, and then I'm going to look for a volume setting that roughly corresponds to those those oscillations, and then I'm going to
Okay.
break that up. So then I'm looking for like getting a granular. So if these are my rotations, on average, I'm going to go down to granularity where I can see the fluctuations of delta that make up like it's almost like the logic that you have behind the dynamic delta bars, which is looking at delta on candles, but looking at it typically on the bigger candles, and this going down to 1/10 of that in volume sort of gets to see if the extrema and delta are getting put in sort of in an overlap between the two. But roughly looking at this, the sort of frequency we're looking at should be somehow set by the volatility here. And I want to say that, all right, so zigzag, I'm doing 15, and that looks reasonable. 1 bar reversal, 15. So let's see what that looks like. So it's giving me about half the harmonic rotation measure there. And then what I want to do, and this one also depends very much on time of day, I could do something broader as well. So we could, instead of grouping it by time period, we could say no grouping, just give me everything. And so a couple different ways to look at this. Again, roughly volatility measures. PA zigzag is a lot closer to a traditional volatility measure, and harmonic rotations are kind of a weird day trader idea. But roughly, volatility measures are all going to sort of scale as the square root of time. So if you quadruple the amount of time, go from 1 hour to 4 hour, you should roughly double the volatility. That changes a little bit. It's not a perfect relationship because markets aren't perfect Brownian motions. They have some kind of long memory, and that changes the behavior of these processes. But again, roughly volatility measures are all kind of alike, and you pick the one that you like, that makes the most sense to you. But let's see if we can. So let's look at the volume candles on this one. So I want to say. Average, I would say bar difference. So let's see, bar difference is going to give me, so I can get the difference, the high and low of the bar, and then I can get the average. And I want to say, yeah, average should just be average continuous. So that's going to be the walk forward on this. So let's do it on chart region 2. It'll line up with that. Okay. So this one's saying average is, all right. So if we were to try to do the 10x here and say interesting, okay, so the average is 45. So interestingly enough, it gets me reasonably close to this one. It's not quite there, but so let's see to get the harmonic rotation number. So if I'm looking for like 75, so let's do 10,000. Not quite there. That might be on a longer look back.
When you say not quite there, what are you looking at?
So I'm looking at the average here. So again, bar difference is telling me how wide are these candles. What's the high minus low on each one of these candles? Now I'm taking the average of all of them because I'm trying to get this volume setting dialed in, right? So I want to. So if we're doing harmonic rotations and trying to match that, I'm trying to get a candle where what volume gives me the average here equal to the average here, right? So matching that average harmonic rotation length to the average, volume candle. So basically, I want each one of my volume candles to represent a harmonic rotation. Alternatively, we could do it with this other one, which was about, I think the basic setting was a little bit closer to this. This sort of was closer to the PA zigzag.
Okay.
But just playing around here for demonstration purposes, we can do, so that's a little bit of an overshoot. So again, 72. So let's dial it back to like 13, do like 13.5. Oops, looking at the wrong number. I want to look at that average there. So that may have been close to what we want. 64 now, keep going. Okay, so let's say 20. Let's say really, if you're doing the calibration the old school way, looking at this now, I'm probably not looking a long enough look back. This is 30 days. He would typically do 90, but then we'd go to a tenth of that to get the granular.
Okay.
So, and then we would do the DDPs on that. But I think a lot of these concepts are fractal and can work at any time scale. And I mean, you can kind of tell from let's look at the dynamic delta pivots on here. You've got a lot that you can tweak here to sort of fit the time frame that you're looking at and make sure that you don't have too much too many of these firing. Let's see how this goes. I'm not seeing anything here. So what we could do is lower those standard deviations and see. So okay, so there's where we see maybe a lot. And so sort of dialing that in to see, all right, does this seem like, am I getting a reasonable number of these things? Again, with these sorts of studies, beware pareidolia, seeing patterns that aren't there. But with some of these, it's like, it's kind of hard not to believe that the market has memory and that, this is like,
Yeah.
there's no way that's completely random. It may very well be completely random, but I certainly I find it to be a compelling study. This was my first Sierra chart baby. This was the thing that got me going down this whole rabbit hole. And so I really like this concept. I really do think there is a market memory to these things, and I don't know how pros are tracking this sort of stuff, but this is a way to view it that makes a lot of sense to me. And again, it's fractal. I think you've kind of got to dial it in by sight and feel and what you think works. But this is a good starting place. And I mean, right here, it didn't take as long to find something that looks reasonable. The other thing is, again, you roughly have a sense for what's going on, which is like, look, you're down at a tenth of the volume, and you're looking at 10 of these bars, and you're looking for, you're looking over some look back window of basically delta behavior, and you're saying, when is that delta sufficiently anomalous to trigger some sort of trigger these color bars. And there's a lag, which is this pullback bar allowance, which is like, because if it starts to really hit an excess, I want to wait for it to be done. I want to basically be like, that was the peak in delta. So there is some, so this adjusts, how long after you've seen a peak in delta do you wait before you go draw
You'll print it, yeah.
yeah. So, and then you've got these ways that you can filter this as well, as far as like if you're doing anything automated, which one of the things I like on these guys, and we can try to do a longer look back and look at this, and I think I've shown this a number of times before, but using, we want to use the signal zones. And so, let me go into the subgraphs that are behind here, which is basically like, all right, when this pivot gets detected, which is going to be after you've had some sort of sufficiently anomalous, as set by a standard deviation, sufficiently anomalous, one-sided delta, so aggression in the sequence of bars. Then, after that pullback allowance, we're going to draw, was it an up pivot or a down pivot? I also have some other things you can play with as far as like tracking, the fibs and tracking, one time framing of these things. I've not played sufficiently with these, but this up pivot and down pivot with the top and the base, specifically looking at, okay, if I put signal zones here, and then I say, all right, let's do cells, because I see this one up here that will display very clearly. And then I want to say the signal that triggers a draw zone. On this one, it doesn't, as long as you're using the correct, down pivot, it doesn't really matter down pivot top or bottom, as they'll fire at the same time. Okay, down pivot top would be the zone high, and then down pivot. Let's see. Down pivot. All right. And then I want to say clipping rule is across the top. And let's see. All right. Yeah, so you can see here. right? So as soon as you got that 3, you go, all right, it detected some anomalous delta here. You go 1, 2, 3, bam. On the close there, it's firing firing the signal and setting these guys. The other thing you can do here is you can decide what makes an up pivot or a down pivot, and that's going to be here. And this one is basically where is the last bar close, where is the last bar high, where is the confirmation bar close, confirmation bar being that third one or whatever based on your pullback bar allowance, and then one is based on the actual delta in the candle. So another thing to play with, it gives you a slightly
Yeah.
different set of outputs.
Ha- Have you seen any significant differences among those? I mean, I've been largely using Delta on those DDPs, but I think the default is probably last bar close. I wasn't sure if you've done any testing to see any discernible differences between those.
I hadn't played around with it enough.
Yeah.
There's, let's see, we can mess with that right now. Let's see, duplicate this.
So
Um,
the other thing I've been curious on those pivots is the delta of the VPOC, which if you're choosing the VPOC as your
right. That's a good question. I might be able to do like I could embed that because we have that VPOC option now that you guys
right.
where because you guys were drawing it by hand, and so we've got this. So this is doing VPOC as pivot, and so I've got the number hidden in there somewhere. It would be nice. That's a good idea. I could make another subgraph and display and kind of print that, and you could use one of their draw styles to like put the value on top of the bar, or like write
Or
the value
something.
there.
Yeah.
That should be a draw style. We could do that. It's a good idea. Let's see. So we want to do. Sorry. So the second one, I want to say, let's do blues, and then we can mess around with some basic stats on this thing. So we want to do up pivot, and then up pivot, and then up pivot base, and then cross bottom. Okay, and then let me make this a longer look back. Again, it does seem, and beware the pareidolia, but it does seem like used it seems like there's there's got to be juice in this thing. Um, Let me see. Let's show the clipped levels. Raise clipped zones. No. Raise clipped zones. No. All right. And then we can mess around with putting and something with the stats collector here, and then we can play around with the different kind of underlying settings here. Okay, so let me, since y'all have seen this, since we've seen the calibration, I'm going to take these off. I guess I just hide them. It doesn't matter. It's not taking up a lot of space. So let me hide these guys. And then let's do signal stats collector. And then let's do long on procs because we're making a touch there. And so these are the second one. I should label these, but I remember the second one, zone high first touch, the bracket stop type. Let's do subgraph based, and let's do zone low first touch, and then we want to do, let's do, I don't know, RR, and then we'll do, I don't know, we'll do 2R to make sure that it's not a lot of 1-bar. You know, once you got a lot of 1-bar hits and clips, I'm trying to be conservative, but this is one of the things that if you've got a lot that are kind of over on the same bar that they started, again, I'm trying to be conservative here on my estimates for those, but be careful. That's a sign that, you know, you should go to a lower time frame to look at things, etc., with all the caveats about being careful on Sierra time frame shifting. Okay, so sell zone low first touch, subgraph based. I'm going to do signal zones on high first touch. Okay, appropriately inverse there, risk reward based. All right. Let's for now leave those off, and then I like to turn these on so that I can just see. Sanity check this. Alright, so this one's getting wrecked pretty good, to a degree that would almost make you think that if you're losing 0.33R on every trade, no, it's not a lot of trades. You got 9 trades, so not worth a shit on statistical significance. So that means nothing. We can either lengthen the look back. The question is 0.2 trades per day. Let's say that we are aggressive in Q traders with a bad prop count habit and like taking a lot of trades in a day. So let's dial the, not advice. Let's dial the, sorry, I want to do the opposite. I want to lower the standard deviation threshold, and I want to get us a decent amount of trades per day. Let's even do like 2.5 because it's in Q, so it's a relatively cheap instrument adjusted for volatility. And wow, seems like a giga fade on this one. Let's do 3. Okay, because if it's a fade, we can play around with turning this around. But the other thing is, I'm curious. So if you do, one of the things that I find on this sort of dynamic where it's based on a bar is like what can really wreck you here is we can look at our the win rate. That win rate's a little low, so for a 2R trade, I mean we're gonna go to a 1R trade and see how many it cuts us off on. Let's see how many same bar stops happen here. Okay, so you are seemingly this on this look back is actually better as a fade. So we could go with that, and we could try to flip around and see if we can what if any alpha you can capture there, taking the signal the other direction. Now here's the other thing we could do. We could change. There's a couple of things to play with here. VPOC is pivot, yes, no, versus smack dab in the middle. All right, so this one actually makes you a little bit of money, but you're sort of in spite of yourself. Your win rate's a little low, but you have enough wins on the big ones that make up for it. So in this, at least in this look back, VPOC is pivot is a pretty strong fade. Again, grain of salt because it's 32 trades, which doesn't mean jack shit. But let's look at this. The other thing to play with is this pullback bar allowance. There's some, and what you want to see is that like stuff should move around fairly smoothly. You don't want to see radical jumps here. We could also try longer look back. We could also try, let's see, this pivot direction being delta based versus default last bar close versus last bar high. Interesting. So let's, just for shits and giggles here, let's turn this around and see if we can't actually try the fade, which is on procs, fade it. And I've found this also with like testing a low time frame liquidity zones. This sort of thing with NQ can have these funny dynamics that are opposite other products. Where like ES, you can get some positive results on liquidity zones playing them, as in the out of the box way, versus an NQ it being a profitable play it in the exact opposite way, do it as a fade with a short skew. So let's look at this, and this would be an interesting. It's always interesting with these two to think like, look, at the end of the day, if you're getting paid consistently markets, you're getting paid for picking up risk premium. So what's the risk premium you're picking up here that you ought to be picking up? And so the interesting thing here would be to totally flip this on its head. You would be taking a negative skew trade instead of positive skew trade, where you're risking twice as much as you're gonna win, and you're doing it at a high volume spot. So that makes sense to me that is doing something uncomfortable. And I think if you can find reasonable rationale for why there's a risk premium here that you're picking up, I think it can give you some confidence. Okay, so we want to do this the other way. So I want to do zone 4, low first touch, because I want to fade the yeah, is that how we actually want to flip everything around? We want to do it. Sorry, before we do it here, we want to do it at the level of signal zones. So I want to say, is that right?
Yeah, you'd want that signal zone to be the that buy or that sell one to be the up pivot.
Yeah. So let's. Well, I think still the logic would be like, all right, so we come into this guy, let's say when we hit this guy, rather than taking it as a buy, it's blue, but I want to take the short and then put my stop up here at the 2R loss point.
Oh, as you were saying, yeah.
So here, let's just try a straight inversion. So again, the long signal would be I hit this sell zone and I hit the low first touch. And now I'm going to do a, maybe we could do subgraph based stop, because we have these fibs on the, how do I want to do this? As far as it always gets tricky. So subgraph based stop. Let's do, so right now I've got, a puzzle, which is like, okay, so because I do want to sort of flip the zone, as it were, but I want to take it on this direction. So maybe I could add another zone, because what we do have in the dynamic delta pivots is I have these extra subgraphs to play with. So for instance, on the down pivot, I have the, I would want to be looking at the 2A here, and so I'd be like, let's do like a fat up arrow to see where that would be on this guy. It should be down here. Oh, no, sorry, 2A. I'm mixing up A and B maybe. Arrow, so ignore. And then I want to do 2B. Arrow up. Yeah. Okay. So, and maybe 2A is a little more dramatic than I want to do. I maybe want to do a 1A. Sorry, 2B. I want to do 1B. So down pivot 1B. Red. Arrow up. Okay, so I'd want to put my stop here. And now the question is, when I measure that, so the question is here. It's good that you had me think about this because what I want to do is, again, I want to use something risk reward based and subgraph based. So I want to say that the subgraph should be sort of that guy, but that's only at one point in time. So then the question becomes, how do I trigger that as a how do I use that value appropriately? And I would have to do something else. I would have to somehow I'd have to modify, what I'd have to modify is these signal zone studies to give me some sort of like, I have zone clip here, which might work. We could just do like a straight, like I could give it a lot of slack and just say, all right, hold the trade until you clip it, until you hit the other side. And we'll do that as like an exit on procs. It's probably the play to make. But what I really want to do here, what you guys make me realize I need and that I don't have, is that what I really want is something more flexible than just the edges of the zone. So there really should be a parameter here that's like, all right, if I hit the top of the zone, I don't just trigger a first touch signal on the low and the high, I can also trigger a first touch signal at some multiple thereof, right? Which would be like, you know, the -2 or the +2 or whatever. I want to be able to trigger other spots so that we can use, you know, at least one other, and that would be easy enough to put in here. So let me actually just make a note for myself right quick. Which would be, sorry. So I want to make a note here, and I want to say, I basically want first touch zone fibs. So prop alpha to do list. All right. So, but that being said, let's figure out how we can get this some kind of see if we can capture any of this fade alpha by flipping these around and doing the all right. So this should be a sell zone, which means I want to take that trade as a buy. And instead of having a subgraph based stop, I'm going to do tick based, and I'm going to give it some slack because I have average stop width here. What is that in? What's in points on NQ? So $20. So I basically want to give it so if I want to do twice that, because this one's again looking for the 2R, so I basically want to give it a 2K stop, and a 2K stop in NQ would be 100 points, I suppose. So it would be 400. So an uncomfortable, certainly that would be risk premium. I'd give it an uncomfortable stop here, and then I'd want to do risk reward based, and I'd be looking for half of that to invert the 2R. I mean, the other thing we could do is just straight up do subgraph based and do, it's probably better. So the take profit subgraph being the zone high first touch level. So basically the top of the zone. So I take the trade long on the bottom of the zone, on a stop, I take profit at the top of the zone, I want to stop out at 400 points. And then we'll flip this one around too, and we'll say this is, I want to short these guys on the high, and I want to do tick based with a big stop, and then I want to do a subgraph based take profit. So just give me the top of the zone and the bottom of the zone in this case. So SG5 2. All right. All right, so that's about break even. We can see. Let's see. I wonder what it looks like if you're only doing RTH. Okay, actually, not working on RTH. Let's shrink this a little bit. All right. Yeah, I don't know, man. Let's see. At this point we're knob twiddling, which is a bad thing to do. Which is bad. Again, we all do it. It's super tempting. But the curious thing is how flat that looks, like how close to break even that is seemingly a pretty good inversion. Again, not a perfect inversion because I need to make this, first touch zone fibs to really do it accurately. And let's see.
That's interesting. Okay.
So then the other thing I didn't try on the original setup was we could go back to this and limit ourselves to RTH, which would be a more accurate reflection of what it might be doing. So again, that should be 5, and then this should be. So the stop here is zone low first touch, zone high first touch, and then take profit base being RR. Let's say 2, and then flip this around. Zone low first touch, subgraph RR 2. All right. It's kind of interesting that it's interesting when you try to flip something around. It's you lose in both directions, and that could be a number of things. Again, we're just kind of screwing around here, playing with the settings and see if we can calibrate this thing. But so maybe it's pareidolia in this instance. There's all those seeming bangers that seem that are tantalizing here. So I think the thing is, and the tough thing is, once you start knob twiddling, you're already in trouble. And I would say you can lengthen your look back, try adding filters for trend, things like that. I think the thing I would like to do is to make fading some of these things easier. I really should make a proper fib here for these signal zones. But it's always interesting to play with this stuff, and I really do think that there's some good information being captured here. And I think the tricky thing is, I think a lot of this stuff is really tough to to let's say purely monetize on a pure solo basis without I think you can find some juice here, but I think the tough thing is anything that's systematic and intraday. This is one of the most competitive markets in the world. Anything that's systematic and intraday, if you can find something, if you find something that works, hit it while you can, because nothing lasts very long here.
Yeah, they're certainly interesting. I mean, when they print, especially intraday, you've got some anomalous directional delta moving and you want to see whether that's going to continue. Um, and when you've got a move that's counter to that, I I really enjoy watching them as targets as well because the market wants to go retest those imbalance zones. So they kind of work both ways. Sometimes
Totally.
sometimes you see the price just reject and you get a signal right there at that spot, and other times they're great little targets.
Awesome. Yeah, no, I think it's a really cool piece of information. One thing that's neat too is to see the sort of there's some days where you can see them like hitting the same spot almost like you can see the you can see like you can see that that's where the interest is, right? Like you can really and some of these too, like I don't know, you start to wonder, you go, all right, this is a there's so much skew on that. There's like that's an absolutely insane amount of skew on playing that guy for, Giga R. And that's the kind of thing that's this is day trader crack, and it's hard to capture these on again systematically. I think we could play around with doing something with much more extreme R, um, and maybe even tighter stops on the first touch, and see what that looks like. But you think how many of the losers gets paid for by properly holding this guy? And the other thing that's
Mm-hmm.
possible is like, again, if you're using this stuff as entries into higher time frame, trends or swing trades and things like that. And this one being a banger, but as a swing trade, right? Like, um, so we can play around with the skew on that one. So subgraph, but looking for like I don't know 5R. It's better. It's worse.
So
uh,
are those DDPs are they best used on those lower the fractional time frames? Um, and the reason why I brought the question out, was watching Flaherty's Delta video. He kind of walks through, what's a move in NQ and kind of settles on the 7,500 volume candle. And the DDP chart set to 750, which is 1/10 of that. But I was playing around with DDPs on the 7,500 volume chart, and whether like you're talking about the pareidolia or not, there there does seem to be some sort of rhythm to the moves on those higher time frames. So I wasn't sure if there's anything to be able to change when you move to a higher time frame, for instance, if you can adjust, if it's you got to be careful to adjust the look back or any of those other standard deviation settings depending on the time frame.
yeah,
Like,
I think it's hard to make. I think it's hard to make a blanket rule for this stuff, also because um, again the dynamics are so different product to product, and I think that this volume methodology can get you started somewhere. But then I think you gotta sort of tune it there by hand. And look, I knob twiddled, found you something that worked. Skew, playing for skew is the name of the game, which is funny. It's kind of what you think when you see some of these things. Is like the wow banger actually ends up being the insight that you can get giga skew, but you have to. But it does seem like I did have to knob twiddle uncomfortably. 3.5R on these things seeming to be a sweet spot, giving you a good Sharpe ratio. But I don't I don't know how stable that is. Here, let's see if we can how much we destabilize it here. Um, uh, right, so it's interesting that it goes 2 to 3. So And now this is not knob twiddling I feel terrible about, because look, we had the original basic thesis, which was like, just the base of the zone, and it's just twiddling. What's the right R on this guy? All right, if we just hit it at the first touch, I think we're hitting a VPOC, exactly what let's play around with what does the delta do to it. Oh, delta actually fucks it up. Confirmation bar closed for the win. Giving you something that looks reasonably stable, which is like, look, I can move it around here in the zone of 3, 4, and I'm getting, the alpha seems to kind of fall off. Interesting. It's interesting where 4, 4.5. But so there's a pocket here that starts to be positive EV. And what you may want to do is find, again, I wouldn't consider this to be egregious overfitting, to just be tuning the R on these things. Again, the caveat that that's not a huge number of trades. I'd increase your look back. But what I'd look for on this stuff is like, look, you had a thesis. It's like, okay, I hit the VPOC on the first touch. I use the bottom of the zone as a natural stop. I'm looking for some amount of R. What's the right amount of R? I think this is a good search tool for that, and making sure that like you've got a pocket there, that is stable, that shows positive alpha for a range of parameters, and then increase the look back and play around with like, is this just in sample? Is this an in sample overfit? Right? If I go back, I went back 90 days for this one. Let's go back 180 days and see if this is trash. And so I think the other thing is pick an instrument that's similar to it, and this is something that's nice to see, which is I just doubled the. Oh, but I'm still not getting the weekdays in sample. I just doubled the. Oh, I didn't roll the goddamn contract. Okay, sorry guys. So we'll see in a second. But yeah, what I'd want to see is that this looks good on a bigger sample size. Now that we tried it effectively, it was just for this, for H. And so if this looks good, adding U and Z in there as well, then, and you still have this sort of robustness over a range, then that would be pretty fucking cool. And what do you know? So the answer seems to be play these with higher skew. That looks pretty damn good. Now again, caveat, past results not indicative of future results. But I'd play around with that. I think the thing that is that skew being the thing to look for. Now this gets so messy here. What did I do? Max pivots to view. Let's view like the last 20 of them. So, and that'll change the view, but it won't change the number of signals or whatever. So, and that's pretty cool. You got you get to hit this once a day. A 2R. Now to say that I'm taking it, no, that's a nuts win rate for a 3.5R trade, right? 3.5 to be winning a 3.5R trade 30% of the time. And then that one, what's the risk premium test? Like, what are you getting paid for here? It's like, let's see, how long is the trade? I mean, holding, you get paid to hold that winner. You get paid to let your winner run on that one. And like this one's uncomfortable. You're holding it, past close and the Globex for a vol spike at, Globex. Like that's an uncomfortable hold for sure. So again, I think you get getting paid to take risk, if you're getting paid. And I think that yeah, this is a fun one to play around with. And yeah, 2000 volume being the thing that we played around and found that that was a good match for the harmonic rotations, whereas the original settings are actually a little bit closer to what the PA zigzag would be saying. But again, those are basically just, that's a starting point. I don't have anything hard and fast here on. And also another thing worth looking at is that drawdown is pretty rough. Um, Another thing you could do is that max loss is also pretty rough. And one of the things that I found here that can be a booster is you can say, I'm not interested in playing these pivots if they're freaking huge because I end up having to take on way more risk than I want. So
Ooh, I didn't realize they had that.
so
That's what
you
that
can
meant.
you can filter these. You can be like, don't even show me if the pivot's way too wide, like um don't show it to me. Now, interestingly, it drops the sharp. So somewhere in there, you are getting paid to hit one of the interesting. Again, worth playing with here. Min width and ticks. Maybe filter out the really tiny ones or trash or something. Um, let's see. See, this one doesn't seem to be having much of an effect, if any. I'm wondering if it has any
I'm not
effect.
sure we're gonna get many of those that are 30 points wide.
Well, this one actually saying, about your brought your max drawdown down. So okay, again, back on
Mm.
the getting paid to take risk here. Um, so filtering um, for pivot width is something you can do. What's the other? And again, bar look back is not something I've found 150, at least with the 750 volume, kind of the typical settings. I've been pretty happy with 150. Um, because the thing is, this has very unpredictable effects. It ends up giving you something that looks totally different. So I think and again, it's basically anomalous rel what. And the thing is, if you're taking a longer standard deviation, look, there's markets are totally non-Gaussian. I say this all the time. They're totally non-Gaussian. So if you see something that's if you see something that's 7 standard deviations in a market, it isn't. It's because it's not. It's not Gaussian. Standard deviation is just Um, I'm not even sure that some of these distributions have like enough convergent higher moments to make this like something that you could reasonably approximate. Um, but as a proxy for but that being the case, I think it's a useful proxy for saying like when are things weird. Now the thing is, it's weird rel what, like what defines normal. Well, normal is rel some look back of like what is delta typically been looking like over the last 150 bars. Now if you make it too long, the issue with making it too long is that it can create a lot of compression because if you pick up overnight stuff, right? If you pick up quiet periods, it can create compression, which ends up giving you like way more than you actually want. So this has some weird, not entirely easy to understand behavior. So that's why I tend to leave that at 150. I haven't really played with the number of bars thing. The thing that I do play with is standard deviation threshold, pullback bar allowance, and some of these discrete ones. Again, the VPOC being a cool, what is the VPOC definitely boosting your win rate here. Probably also giving you better skew as well because you're more likely, you could be like closer to the. This is a very very skewed. I wonder if you do this, should be taking some of that skew off. No, actually makes it more skewed. So interestingly, VPOC reducing the skew um, to some small degree. Maybe saying that maybe you're taking more at the top there. Um, anyhow, I hope that's helpful. I don't know if I on at the end of the day or text, I don't know if I gave you anything more than what you if I gave you what you're looking for here or anything more than you already knew.
No,
Um,
I think that was really helpful,
okay.
especially walking through the setting up the stats for those kinds of things. I mean, it's so easy just to get stuck on one idea, but there's so many different settings to adjust, and just watching you go through
So I'll save this and
changing them
drop
just
it.
a lot.
I'll drop it in the chat too. Uh, so I'll put this in the chat for y'all to play with. Just as again, I got it set up here with the zones and the stats stuff. So let me get these annoying things off. I thought I took them off here. Um, but yeah, the other thing. So the other thing on time frame. Uh, I don't know now if we're to escape the Flurry. If we're to drop the Flurry methodology, I want to say escape because I think it's a good methodology. But I think if we're to drop the methodology and say, okay, let's zoom in. So let's screw around with that right quick. Um, I mean, next, I meant duplicate chart. All right, let's make another one of these, and let's see what these things look like. I'm gonna take this stats stuff off and just see if we can find something that looks well calibrated as we zoom in. So again, a lot of this stuff I think is fractal. Now the thing is, the lower time frames you go to, the more trades you probably end up taking, which is probably worse for the alpha that you've got to earn. The alpha you've got to have at lower and lower time frames gets really really high in order to surmount costs. Now NQ cheaper is like maybe the cheapest thing you can trade in a volatility. Um, a sort of volatility adjusted cost because it's very volatile and very cheap, especially rel volatility. So dynamic delta pivots. But that being the case, so let's look at this thing as we go down, as we zoom in. So what would zooming in be like? I probably would do the zoom on sticking on volume bars. Again, I haven't really played with this thing on time bars, so I don't know. But let's start by having what we got. You know what? Let's do more than that because I already know what it looks like on 750. So let's go to a quarter of what we were. I just want to find something that's reasonable, that's informative, that doesn't give me too much, that doesn't give me too much noise. Like that would be too much noise. I think the thing is you go to lower time frames, you're gonna have to crank up the standard deviation threshold correspondingly. Um, so I think that again, that's the sort of thing where it'd be like that's reasonable. That's giving me a reasonable amount of structure on the day. And I don't know how you're using this Airtex. Are you
I just
using
posted an example in the chat there. So I was messing around with going up in time frame
okay.
on a
Oh.
7500
Oh, sick.
V.
Okay, going the opposite direction. Okay, let's do that. Okay, did you find that then you would have to, with the standard deviations, did you have to adjust that pretty considerably to
So
do?
so that one right there is 150 pull back, look back, and standard deviation of 3.
Okay. Yeah, I think the thing that you find on the time frame is I want to say that lower time frames you're gonna have to be much more conservative on the standard deviation, whereas I think with these, but I don't know. That would be my guess. But let's see.
Everything
So
higher, you really don't get too many
yeah,
results.
here you have to drop it considerably. Now I'd be inclined to give 3 again. Okay. So interestingly, you go 3, 3.5. Yeah, so these, I mean, and again, I think I would use it the same way. It's pretty cool. I would use it the same way, again, goddamn, maybe pareidolia, but like, it really does seem like
Right?
these
It
defined
just the
defined
lines, man.
structure at a, yeah, I like, totally random, right? Totally random there. Bam, bam, basically that guy. Like, don't tell me the market doesn't have memory for these sorts of things. And now at this time frame, yeah, now here's the thing, because it is fractal. So at this time frame, you're taking the same logic, you're picking up, and it should be more important because like you're getting like, wow, this means like Giga Delta was put in at a very high time frame. This is like
Right.
aggression at like noticeable aggression at a high time frame. So they should carry more weight correspondingly. So one cool thing would be to like color these differently and then overlay the drawing. So it'd be like, I'm gonna color this. I like your color scheme there. I think that is pretty dope on the. Am I doing the colors? Yeah, I'll do the colors here. So I like that. It's not exactly the color you have, but doing like whatever we do, cotton candy here. And then let's do this and pull the levels in here. And so we could do chart drawings from chart number 3. All right. And then so this is cool because then you're seeing the confluence from the higher frame delta with the low time frame delta. And then I think now again, you gotta be careful because this can get real noisy. I think especially in the lower time frame stuff. So like, let's get a little bit less of these guys. Let's get the last 10 pivots. But I think this is a cool way to look at structure on a multi-time frame level, and I don't know that you necessarily want them all in the same chart the same way, but I think it can be cool to look at the be aware when you're moving into these high time frame levels. And I think also with these, I think you want to see rotations away. Um, you know, I think if you come to something after you haven't gone away from it for a while, um, obviously, rather than if you're chopping around it. Um, but like, I don't know, pretty cool. I like that. This was something I've not played with at all, so I really like the concept. Again, in principle, a lot of this stuff is fractal, but I like the idea quite a lot of using this as a multi-scale way to look at where there's been anomalous aggression, and it'd be kind of fun to look at the stats on these as like long-term swing trades. Um, but hell yeah, I think. And would you say you use 7,500 using the big candles? Same kind of thing. But yeah, man. And then let's play around with. I do think that VPOC is absolutely what you want to do. So I'm glad you guys got me to do that. But just for the hell of it, yeah, seems like VPOC is understandably better. But anyhow, you got any other thoughts, comments, concerns? Anything funky that hadn't been working right? I really will work on this. I really do want to get this first touch zone fibs business done, and I do want to get you guys that market memory study, which I've shown on this before, but it's basically like something trying to do a more touching these dynamic delta pivot areas, like whenever you come to them after rotation away, triggering signals every time that happens. I think is pretty a pretty fun one. So I have to polish that guy up and get that out for everyone to play with. I think I don't know if I put it in the main DLL or hate to clutter up people's um, stuff with another DLL, so I may just put it in the main DLL. That one, and I think I've been swamped with other work, but I do think the first touch fibs is something very reasonable. And then what I was telling Vespa at the beginning was that I want to do something that's like for any signal, make a be able to stick a first touch um, drawing level on it, right? That'll trigger a signal when you come to it and clip it. But it doesn't have to be just for gain lost or ATM or whatever. It could be like anything. You could see some kind of like, you could use it on your lower time frames for seeing certain combos and then saying, okay, whenever I see this combo, I want to draw a level here at the base of the candle or whatever, and then when we come to it, play that level again, and use a subgraph, and you could get the stats on it and all that kind of stuff. So I think just one level of abstraction more on that, which is something I really like doing, is like can we peel this logic back one step further and make it more modular for people to do what they want. So but and then yeah, at some point I also have some I don't know, let's say some more of the simulation stuff I'd love to get back to on the modeling these prop accounts. And there's some fun projects that I have with that I would like to get more time for with Sierra chart data stuff, playing with it in a more granular low level way. But anyhow, I think I'm going to call it here unless anyone has anything else. But thank you guys for hopping on tonight. And Urtex, I appreciate the questions. And I'm sorry that we didn't do this the other week. I don't know if the mic stuff, I think the mic stuff previously was on my end. So my apologies again
I
on that.
I think I have probably an operator error here too. So appreciate the patience.
Well, thank you guys for joining, and I appreciate the feedback on this stuff and these ideas. I love this idea of looking at this on different time scales. So I hope this was useful for you guys. But
Yeah, this is really good. Thanks a lot.
sweet, y'all have a
Okay.
good evening.
Yeah, you too.
Bye.